welcome to your Daily 5. This is Mish Schneider, Chief Strategist of MarketGauge.com. And the last one I did, which was in February, we covered the fact that the leaders continue to lead. And we really looked at sector ETFs. For today, we're going to do something a little bit different. We're going to talk about the same theme in terms of leaders continue to lead, but we're going to look at large cap leaders. So I'm calling this segment Things in Motion Tend to Stay in Motion Part 2. When I did my last video, what I really talked about was our trend strength indicator, our proprietary indicator, which tells you based on how we measure momentum, risk, fundamentals, technicals, etc., the ones that were the highest TSI rankings were the ones that our quant models were buying. And so what I did for today was I took a look at the large cap leaders and took out what I thought was interesting for us to look at, not only because they are continuing to outperform, but because they also cover several different sectors themselves in terms of the stock choices. But I also added two at the bottom, Microsoft and IBM, which are on the TSI ranking, but way far down. They're not in the top 10. They're basically in the top 20. And so I wanted to cover them more from a discretionary standpoint and also from an opportunity that could be setting up in both of those stocks. So let's start with CTLT. So this is in the healthcare pharmaceutical area. And of course, we looked at IBB in February and saw that it was in the top 10 in terms of sectors and TSI. So not surprising that this would be one of the stocks in that area. And what we can see here is that it's still in the top 5 in terms of large cap leaders, but it's done nothing but a major consolidation since it reached its high here back in early February. And since then, we didn't have a reversal pattern. So those reversal patterns are such where it makes a new high and then the next day closes below the low of the day before. And we've gotten a little bit of a sell-off, but if you think about it, not very much really. So that's why this has not necessarily changed in terms of its ranking as a strong stock, number one. And number two is it could be, from a discretionary standpoint, setting up with all of this consolidation, provided it holds this gap. So the high of this gap here is 54.98. And then the low so far that we've had on this move down has been down at 55.91. So that means really you don't want to see this breakdown, I would say, under 55. So what would I look at in terms of buying this? Well, it certainly meets the criteria as far as being above the 6-month calendar range high. That's that green line here. We're in a bullish phase. Obviously, here's your 50-day moving average. In terms of leadership, though, it has taken a backseat to the SPY. It is now underperforming. And in terms of momentum, it's come down, but also at a key point holding the 50-day moving average. So what I would like to see in this type of situation, knowing what the risk is taking a look at the last several days of action. I would really want to see this high clear at 57.03. And then I think you have a reasonable risk, like I said, to 55 if you want to play it tight and not see this gap build. If you're more of a phase follower, then it would be if it breaks down under the 50-day moving average. Now, of course, we would be remiss in not mentioning Nvidia. It's still the number one TSI ranked stock, even with the massive correction it had. What's so interesting about this correction is with the new high here at 974, we sold off with the follow-through yesterday on the reversal, but it made its full 10% in just 2 days. And basically, when we have a key reversal, either from the bottom or the top, we look for about a 10% move. That happened in basically 2 days. So now what's going to happen at this point now is I think, first of all, we have to look at this high at 897. So between 897 and call it 900, that now is your immediate term point that has to hold. If you're just listening to this video later, or you're wondering what to do about NVIDIA, I would probably play it really tight and say if it breaks 897, I'm gone. And then, of course, we have to start making some more moves over this 900 level we have to sustain. And I would say your first area here would be probably somewhere around that 927, which was the high of that day. We get through there, of course. It's possible that we get through these highs, 974, in which case 1,000, 1,200, those are the calls at Nvidia. Certainly not without possibility. It's obviously well outperforming the SPY. On momentum, you got a mean reversion right the day before, actually kind of on the day that it started to reverse. And so that was a good signal to probably take some profit or at least be aware of the fact that nothing goes straight up forever. And now we'll have to get back through that Bollinger Band and continue to keep that momentum and get back up to, like I said, that 937 level here, 927, and then, of course, that 974. Now we have to go to Uber. So as I mentioned, we're looking at a whole bunch of different types of stocks, obviously, with pharma, then Nvidia with software. This one is considered technology software stock as well, but clearly we know Uber is used for transportation and a good measure for how much people are out and about. And you can see this too had an interesting reversal pattern on this high day right here at 82.14. Didn't quite make, it was almost a 10% move down. Let's put it that way. So it looks like it hurts when it's happening, but if you step back, this is another one, kind of like what I mentioned to you before on the first stock, that has to hold this gap. So if we take a look at this high right here at 73.05, basically what you're saying is you want this to hold above 73.10. We're getting an inside day, and you can see the congestion here if you're just looking at the bodies of the candles, that essentially over 80.15 is really what you need this to break at this point. So that's a possibility as well. It's starting to underperform a little bit here in terms of the SPY. And once again, the momentum gave you a nice clean mean reversion here, which was really, these plugins have just been working amazingly well when it comes to giving you a heads up on maybe if you're a shorter term trader, taking some profits or going short. But right now it's holding the 50. That's a good sign. So we want to see the momentum come up. So I'd be looking at 80 probably as the area to clear. And I probably would want to see maybe at about a $6.5 to $7 risk to see if we can get through these highs and continue on up on this strong TSI. Now we're going more into my consumer discretionary and vanity trade that I've been talking about with Ralph Lauren. So Ralph Lauren, another amazing gap up here over that 6-month calendar range high, that January calendar range high, straight up. Look at the mean reversion that happened here right at the highs, telling you that it was going to get a little bit of a sell-off, which it did, and now it has. So I think looking all the way down here is probably makes sense for maybe hoping for a bigger correction so you can get a tighter risk. Because if you look at the gap low here at 161 and you look at the 50, 160.35, that puts 160 really as the best longer term risk. From the nearer term, though, what we could say is if you take a look at the low from yesterday, 174.82, and give it a little fudge, again, we want to see that hold from the near term. Otherwise, I would anticipate a stronger move lower. And if you look at the tops of the wicks here on all these particular candles, really you want to get through 181. And then we have another gap to fill here at 184.86. So 181 would have to clear to convince me that this thing can take a tackle. 184.86, the gap would have to fill, and then we might be able to see another leg higher in this. But for right now, I wouldn't necessarily be a long buyer right here at these levels. But if we got a bigger correction, then perhaps I'd be more interested. Now, AVGO is another stock, kind of like Nvidia, that fell on pretty much the same day, although it fell just a little bit harder. Also had a mean reversion right here at the highs. I mean, it's incredible how well that works when it comes to the real motion indicator giving us mean reversion trades. And many of you are mean reversion traders, and they certainly yield great opportunity. In this case, the opportunity, of course, was basically, even if you waited for the next day for the confirmation, was selling it around 1390. And you can see you got all the way down to 1250 yesterday with your 50-day moving average here. But the question is, can this move back up? To me, the best answer to that would be now we'd have to get through these levels at 1320. We get through 1320, we will have a resistance on the way up, but at least it would prove to me that these highs that it took out when it's made this move and now violated have gotten back into play, which means health for this particular instrument. And of course, it's now underperforming the SPY as well. And it's not only mentioning to you that it had a mean reversion, but this is also still in a bearish divergence because, once again, it is under the 50, but it's holding the 200 here. So like I said, you need some evidence for this to continue on up. Otherwise, it's possible you might get an opportunity to look at this one again as we get closer to 1220. Now, this stock is not in the model. It's TSI ranked, but way down there, may go up in ranking at some point. But this was something that I've written about from a discretionary standpoint. I wrote a whole daily about it last week, if you saw it. And that is it too late for Microsoft? And look how beautiful this held the 50-day moving average. It's still slightly underperforming the SPY. And the momentum still needs to clear these two moving averages and get back up here, because right now we're still in a bearish divergence. However, price-wise, it's made a nice pop. And overall, if you just look at the action since we've basically started 2024, let's go mid-January to now, we've been in a trading range with the high here at 420.82 and the low being 395. And so essentially what we're looking at for right now is if this starts to outperform based on also what's happening to here with price, if the momentum starts to improve, and also obviously if we can take out that 421, this might be the kind of thing where you basically just close your eyes and buy it. And we still have a target of about 485, possibly this gets up to 500 and change. But again, right now, we have this risk down to the 400 level. Here's your 6-month calendar range high. Obviously, getting a bid today, probably want to have a little bit more evidence of that before I would engage, unless I was buying it at these lower levels at around 404, 405. And the last one I want to cover is old blue, right? IBM. Here we go. So IBM is outperforming. Hasn't quite gotten the great momentum that we've seen in, let's say, something like Nvidia when it was really flying, considering right now it looks like it's making new highs. So that tells me that the momentum can still improve. That would obviously bring it up in TSI ranking. This was another one that was very low down in terms of the TSI ranking, but still in the top 20. and price-wise, you had, again, another gap up. Now, at this point, I would not necessarily look at the gap as my risk point. I would probably look at all this work that it did here down to around 189. But if it could take out 200, let's call it round numbers. If it could take out 200, it's possible. If we look at the low here at 178 to 200, we've got about a $20 move. So it's possible we can see about 220, 225 in this stock if this continues in this direction. Okay, that's it for now. Hope you enjoyed. Thanks so much for watching, and I look forward to seeing you again next month.